I'm quickly gonna go over the pairs for the week and discuss the lookout we have, and yeah, then we can take it from there. So I'm gonna start with the dollar index. Yeah, I quickly wrote it down. Apologies, I'm sick. I quickly wrote it down. Just a monthly, we bullish, making high low, took out liquidity. Weekly, made a new high. Took out liquidity within the discounted price range. Daily had a change of character, therefore anticipating bulls to come into the market, targeting next level of imbalance and supply. So I quickly want to go over what I saw. Yeah, if you only take the last 2 months, obviously I'll agree with you that we are bearish in November and December. But what I saw then was I saw that this level of liquidity was, I can actually do this. I saw that this level of liquidity was taken out, right? Then I saw there was more liquidity created that was taken out as well. And then if we go on to the lower time frame, you'll be able to see the structure shift we had. So that's all I have on the monthly. I don't want to go into too much detail there. And then on the weekly, we can obviously see that we made a new high, which was obviously this high that was taken out and this one that was made, making this a strong low and this a weak high. Obviously, as we anticipate this high to be taken out due to, how can I say, that this high did its job by taking this high out. So obviously we can see that there is a level of liquidity, there's more liquidity laying there, and we can obviously anticipate that to add to a confluence to fill this void or fill this imbalance. And then so that's what I said there, and we took liquidity out. So this is the level of liquidity that we took out within the discounted price. Discounted price, I was speaking about this. So obviously we see that this is the premium level and this is the discounted level, and obviously we can see that price obviously traded into the discounted area as well as taking some liquidity within the discounted area. And then if we go to the daily, for me obviously on the 4 hour you'll be able to see it a bit better. There you'll be able to see the liquidity that was taken out. No, not that one, oh, no. And then we can do that, just make it nice. So there we go. So there we were able to see, like I said, the liquidity was taken out, the demand zone that was mitigated, and obviously the change of character that we had targeting this level of demand or supply, apologies. So obviously we have a bullish bias on the dollar index, and then if we go over to gold, you'll be able, sorry, there's a lot of mess going on there, we'll be able to see why we are looking to obviously target or have a bearish bias. You'll be able to see that there, if I'm going to draw it now, it's obviously going to be like that, but obviously guys, we're able to see that there's a level of liquidity on the daily. We can see the last few days we have been bearish, obviously making a lower high. So I'm not going to go into too much detail there, but obviously you'll be able to see that there's a massive imbalance here left behind. Obviously price need to retest, fill the imbalance, fill the void, or whatever and I call it. That's just how the market works. Yes, price did take out liquidity here, but I do feel with the momentum we currently have and with the dollar strength obviously adding as a confluence, we can anticipate shorts obviously taking out all of this liquidity, all this build up, and filling the imbalance there. So what I'll be looking for this morning or within London session the rest of the week is for price to obviously come up, maybe even take out this level of liquidity. I'm not saying it must, I'm just saying that this is in the back of my mind. If it doesn't do it, it's fine, but obviously if you don't get a confirmation to go short, obviously that will be something I would look into, and obviously that will be able to add to a confluence. But yeah, for now I'm just going to be patient on gold. I'll be waiting for price to give us a confirmation. I'm not going to chase anything, but yeah, so I'll obviously be looking for bears for the rest of the week. And then Euro USD, funny enough, I obviously deleted it from my trading pairs or trading list, but yesterday when I was done backtesting or doing a little bit of a weekly review, I just thought I might take a look into it. And obviously, I've been doing a lot of backtesting. I have a lot of data on EURUSD. So for me, it's kind of pointless just throwing it away. So that's why I just had a look. So I want to go over what I saw. This one will obviously be a little bit better, not as messy. Oh no, apologies, it's messy. But we can quickly do this. Okay, so obviously taking the dollar strength into consideration, not using it as a confluence or anything, because obviously every pair moves on its own. Yeah, dollar will give some strength and obviously give some, how can I say, injection into this pair as well. But yeah, I like to analyze each pair on its own. So yeah, so what I want to show you guys is obviously this level of liquidity that was taken out is exactly same as gold. So let's do that quickly. Just ignore the rest of the stuff. So obviously we have a liquidity level there that was taken out. We can do that. And then I want to show you guys, obviously what I saw was, obviously this was price making higher high, higher low, higher high, and obviously after it took out liquidity, it made a lower low. So now obviously we can do that because we had a change of character, meaning that that new lower high was made, or the new, yeah, like I said, the new one. And obviously if you want to do this, you can see that it is in a discounted price level or price range, and then we can go down to the daily, and we can see that even on the daily there was liquidity that was taken out and price retested or mitigated at a level of supply, which was done very nicely. And then if we go down to the lower time frame, you'll be able to see how the trend obviously shifted and how the 4 hour and everything is bearish, leaving this level of supply in mind. So now I want to take it a little bit of a step further. Yes, we do have the bearish bias, but if we take a look at the hourly, what I saw here was obviously a level of liquidity that was taken out with a lot of bullish momentum that came into the market, breaking this higher, meaning this is the strong or the new strong low, and this is the new strong high. I also identified, so it should be on the lower time frame, I think the 15 or the 30 minutes, you'll be able to see that there's also a level of liquidity just below a level of supply. So the thought process behind this was, or is, for the coming week, is obviously we saw the shift of structure. So what I want to see is, let me just get that tool. I want to see, do I like that? No, not really. Okay, but we can do this. So what I want to see is, I want to see price obviously retest this level of supply, taking out levels of liquidity, level of demand, taking out levels of liquidity, and then obviously go down to the, or go up into the to this level, and then from there taking some sells. So that is what the plan is. That is what I'm gonna obviously follow. Obviously this is a bit more risky if you prefer to wait for price to only come into this level or more discounted price ranges. That will probably be the more wise thing to do. But yeah, like I said, as the dollar is strengthening and as we see bearish momentum on gold, and as well as have a higher time from bearish bias on EURUSD, obviously everything is connecting and coming into confluence. And then yeah, I mean, I haven't had a look at SPX yet, but yeah, so I just want to quickly go over this before I analyze it for you guys. Obviously we saw that we took the loss on Friday on SPX, very noob loss, I would say. Clear levels of liquidity that had to be taken out. There's a clear level of daily highs and daily lows in confirmation with one another, or in confluence with one another, with a clear level of supply on the 30 minute within the discounted price range. So that's why I say it was a very noob loss. That's why I took the risk and I took another entry late in the session. I mean, 6:15 for me, it's quite late that I wouldn't even look to trade there anymore, but that's when I took this entry. I told you guys to obviously price is looking like it wants to go bearish, so trade at own risk. I'm not going to send any signals or whatever you want to call it. And that's when I obviously entered, and I think I pulled out somewhere here So obviously I made the loss back with a little bit of profit, and but yeah, I mean that is what it is. It's last week's trade. I want to go on to I want to keep the video short and go on to this week. Yeah, it's a lot of mess going on there, but obviously, as we can see, daily is obviously very bearish, leaving a imbalance behind. What I like about this daily candle is that it already creates the top wick, meaning that bears should be able to come into the market. What I also like is, or what I don't like is rather, is that, so what I like is this level of supply was retested, right? That's a plus point. But what I don't like is this level of, or this amount of liquidity left behind. Yes, we are obviously bearish and there is a level of liquidity there, but just be mindful of that level of liquidity there as well as these level of liquidities created within market open in Asia session. So, but yeah, I mean, it's not a big deal if we just follow structure, we just follow the trend, we only trade from discounted price levels. It shouldn't be a problem. And but yeah, that's obviously, like I said, that's the bias for the week as well on SPX. Obviously bearish, targeting this level of liquidity first, and then there's levels of demand lower into obviously lower prices. So yeah, that's just the weekly forecast and everything. And yeah, hope you guys had a good weekend, and I'll check you guys in the chat.